Well, it has finally happened. Real estate prices have officially begun to fall, posting their first month-to-month decline in prices in 3 years. That's right. Despite all the headlines you've seen about doom and gloom in the real estate market for the past 2 years, prices have continually gone up until now. From June to July posted the first drop in prices. So let's see what that means for you and your home. Ready? Let's dive in. All right, so obviously the number one contributing factor to home prices now starting to fall is going to be the higher prices, right? High prices in a free market are the cure for high prices because eventually you get to the point where people can't afford the things at those high prices anymore, or the higher prices mean higher profit margins, which means more supply comes in order to satisfy that higher demand, and then the prices will then adjust downwards as a result of the new supply. Now, we've had no additional supply created in the United States because of a lot of supply chain issues. We've had a very, very slow rate of building. Lots of housing starts, but completions very, very low. And so the thing that has been contributing recently to home prices slowing down and now falling is the mortgage rates going up. Because home prices went up, mortgage rates went up also. And so many people just can't afford to buy a new home now that monthly payment would be so much more than their current monthly payment. This has led sales of existing homes to plummet, and last month they were down by 20% to just 4.8 million properties, 6 million a year earlier. You can see CNBC is calling this a housing recession because of sales down so much. Now, you also see here that year over year, prices were up 10.8%. But prices have been moving up so rapidly that arguably month to month is more important than year over year, because a year ago prices were a lot lower than they are today, and so on and so forth going back a few years. And so if you really want to see the trends change, you're going to want to look at the month to month data. And so home prices declined 0.77% from June of this year to July of this year. It was the first decline in 3 years, and that was the largest drop since January of 2011. It was the second largest drop since 1991. So is this the beginning of a massive crash in real estate? Are we about to see a massive collapse in real estate prices? Or could this be something else? Let's take a look at some further data. Right now, 37% of households are owned free and clear. That's right, 37% of all homes in the United States have zero mortgage on them. They're owned outright. Now, obviously, that's nowhere near 100%, but it's more than a third, which means that there's more than a third of homeowners out there who, no matter what happens to the housing market, cannot get forced out of their house. Because if they leave their house, they're going to be leaving to something that will cost them money because prices have gone up, rents have gone up, and so selling their house to go to another house, the same exact house quality, would cause them to have to pay more. And if they went to rent something, same thing. And they have no payment right now because they own their house outright. So over a third of Americans are completely safe here. That's a big chunk of the housing market that is completely invulnerable to any sort of real estate price fluctuations. Let's look at one more key indicator. The loan to value ratio across all homes in the United States was 35% in late 2020. And given the fact that home prices have only gone up significantly since then, this number is better. It's probably sitting at about 37% right now. Going back to the chart here, you can see that again, an estimated 35% is the number of the loan to value ratio, meaning that of all the homes across America, the average is that the loan is worth 35% of the total home value. Now, obviously, that includes all the homes that don't have mortgages on them. So if we look at the average LTV on mortgaged homes, we're at 55%. And again, this was in 2020. So right now, we are sitting with Americans who have mortgages on their house, on average, are sitting at better than 55% loan to value ratio. This means that they're sitting on 50% equity. So we could see home prices collapse 10%, 20%, 30%. No, but not enough people. A lot of people are not underwater. And given the fact that the homeownership rate is 67% in America, meaning 67% of Americans own homes, and on average, they're sitting on 50% equity, it means that as home prices are high like they are now, they can't afford to sell their house and move, which means the only risk to the US housing market is a massive wave of unemployment because they can't afford to sell their house and move somewhere else because the payment would be higher. That's why home sales have declined so rapidly because nobody can afford to buy new homes, which means you can't afford to sell your home. So 67% of Americans right now are sitting on something that they're close to not being able to afford selling. So are there risks to the housing market right now? Absolutely. Could we see a 10% decline in prices, even a 20% decline in prices? Absolutely. Is that going to prompt a giant wave of selling? No. Not at this point. The only thing that's going to prompt a giant wave in selling is a massive wave of unemployment, of layoffs, people losing their jobs, and then they're forced out because they can no longer afford their payments. But let me know what you think. I know there are huge disagreements about this topic. Let me know your thoughts in the comment section below. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.